The views expressed in this video are those of the panelists and do not necessarily reflect the views of U.S. Money Reserve.
Welcome to America's Gold Authority podcast. I am your host, Mike Varnes. Joining me today is Philip Diehl. He is the 35th Director of the United States Mint and the President of U.S. Money Reserve. Philip, I'm so glad you're here.
It's great to be here, Mike. Good to see you.
Good to see you. I can hear the financial advisors in the back of my head right now telling me, don't sell. The stock market's going to come back. Don't sell while it's down. And while the market has been down, is that good advice?
Well, often it's good advice. We all hear it, but I think this time is different. I think gold has really set itself apart here in the last 18 months. And I'm not the only one who thinks this way. Goldman Sachs and J.P. Morgan both have made forecasts for gold and the S&P 500. And Goldman expects gold to rise another 11.8% this year, and the S&P 500 to rise only 2.6% from today's date through year end. J.P. Morgan is even more aggressive. It forecasts gold to rise another 11%, but the S&P to fall 5.6%. For the rest of this year. And I actually think those forecasts for gold are low. We have seen since the beginning of the year every major forecast be revised upward at least twice, some of them 3 times, and we're only in May here, and because gold has been so hot. So I think the estimates still tend to be negative, but what is clear is that there's an expectation that gold is going to far outperform stocks for the rest of this year, and I think it will go into 2026 as well.
Philip, when you look at history, don't stocks generally outperform gold when you look at it in the good years and the good times?
Well, that's certainly the conventional wisdom, is that gold performs better in hard times and stocks perform better in good times. That's really outdated advice. For example, in 2024, last year, was a great year for stocks. Stocks rose, the S&P 500 rose about 23%. Actually, gold outperformed that, rising 27%. That's really a little known fact. And here's another little known fact. In 5 of the last 10 years, gold has outperformed the S&P 500. And over the last 5 years, gold has outperformed the S&P 500. So really, gold has turned into an asset class that performs in both very good times and very hard times.
Do you think that kind of surprises some advisors?
Oh, I definitely think it does. I think part of the reason for that is, I think there's a couple of reasons for it. One is that advisors often really rely upon the advice for products and information from their companies. And it's not that they don't like gold. That's often considered part of the reason. And it's that they don't know about gold. They're not educated about gold. So you may have a financial advisor who really has your interest at heart, but he doesn't have the information to really educate you and his other clients. Now, I'll tell you also, there's a financial incentive here, and that is people who buy gold tend to buy and hold it for the long term. They buy it as wealth insurance, and you don't trade insurance, you hold insurance. And that's the way gold is. And so if you set aside 20%, say, of your portfolio for gold, then that's 20% that is not traded, and therefore a financial advisor can't make a return on by trading it.
I think you could say it's definitely a bull market for gold right now, up, 80% over the last 19 months? What is driving this bull market?
Well, what's remarkable about this market is that as many as 12 different forces have aligned to drive this market. all 12 are not necessarily working at the same time. They they sort of play tag team in the marketplace. But this bull market began 19 months ago on two forces that are very traditional drivers of gold prices. One is geopolitical uncertainty, warfare, conflict, the rumors of war and conflict. And we saw that with the Hamas attack on Israel. That's really where I marked the beginning of this bull run. And of course, at that same time, things were heating up in Ukraine. Russia had invaded Ukraine, Ukraine had held them off, and that war was intensifying. The second force that initially started this rally was the first indications that inflation was falling. And with that rose speculation about when the Federal Reserve would lower interest rates. And there was a wide expectation, and it's been borne out, that as interest rates fell, gold prices would rise. Added to that were several other forces that came to the fore relatively quickly. One is extraordinary central bank buying, especially the People's Bank of China. Just unprecedented buying for really the last 3 years. And we've seen as things have heated up in Europe, we've seen more Eastern European countries purchase gold as a way of securing their wealth against whatever the Russians have in mind. We have also seen Chinese buyers, Chinese retail buyers into the marketplace because we've seen a collapse in Chinese real estate prices, which is the primary way the Chinese have invested in the past. And we've also seen the Chinese stock market in the tank. And so the Chinese have relatively few investment classes that they can put their money into. And especially with a very weak Chinese economy, they have sought the safe haven of gold. And so we've seen extraordinary demand out of China, and China is the largest retail gold market in the world, far surpassing the United States and Europe combined.
It seems like with all of these factors and all of these forecasts, it's never too late to diversify into gold.
Well, that's exactly right. And I mean, why would you wait to buy gold? Especially, why would you wait to sell stocks to rebalance your portfolio more toward gold when gold has been outperforming stocks? Why would you wait to sell an asset that is underperforming and buy an asset that is outperforming stocks? So I can certainly understand the advice and really sort of the conflict that uh, clients feel about selling their stocks in a down market. But I think this is different. Gold is outperforming, and I think will continue to outperform for the foreseeable future uh, the average stock portfolio. So I think it's time to take a close look at gold.
Great advice. Philip Diehl, thank you so much for joining us today.
Thank you, Mike.
That is all the time we have for today's episode. On behalf of all of us here in the U.S. Money Reserve Studios, thank you so much for tuning in. If you have any questions or want to learn more about today's episode, you can call the number in our episode description and speak with one of our friendly account executives. They're going to be happy to answer any questions you may have about precious metals and the strategic role they can play in achieving a secure and comfortable financial future for you. I'm Mike Barnes. We're going to see you next time on America's Gold Authority podcast.
The markets for coins are unregulated. Prices can rise or fall and carry some risks. The company is not affiliated with the U.S. government or the U.S. Mint. Past performance of the coin or the market cannot predict future performance. All calls recorded for quality assurance. Offer void where prohibited.